Hello, trading has closed on March 3rd, 2025. We'll start with our disclaimer. We'll go over our calls and then make our predictions. It's my trading plan for Tuesday. Tuesday is March 4th, 2025. Please remember my calls can be wrong. Trade at your own risk. Look for the pattern with the early high, which is this. Tomorrow should have the early low. We had a few possibilities. We said if this were a false move, we should gap and promptly undercut this low. That didn't happen. We said if we maintained a gap higher, we could be off to the races on the upside. Well, we did gap higher, but we certainly didn't maintain it, so that didn't happen either. So we have to rely on other stuff. We had a target, 5977.77. The preferred time frame was early this morning. It actually printed in its preferred time frame. My idea was if we could stay over that, this is the support resistance area, and that would hold the support. Instead, we printed it and it was resistance, almost right on the nose. We also had a lower target. We had a target of 58.57.79. Actually, somebody who pays more attention to the rules of my system than I do pointed out that was not the right number. It should have been 58.38.23. I'm always grateful when people point out my mistakes because I am not perfect. Anyway, we also had an ultimate target of 58.37.65. Now once we gap up, the numbers stay on the table but not the time, so there wasn't really a prediction they'd print today, but there wasn't a prediction they wouldn't print today. It was just a prediction they would print at some time, and of course they did. So all those things printed within their preferred time frame. I like to tell you that the system always works this well. I like to tell you that we always hit higher targets in their preferred time frame, find resistance, drop to lower targets in their preferred time frame and find support. I like to say that, but my nose would grow. It's nice when it works, but nothing always works as well as the system did today. This is just a reminder of what we said. We had this huge collapse, and I want you to see that the close was over all these prior lows. So we have these big drops. We hit prior lows, but on the close, we just can't hold on to them. During the day, MEJT said this rally would retrace. It was false. Said this drop was false, would retrace. Said this drop was false. This rally was false. Everything's played out. We have to keep reminding ourselves that this is Tom DeMark's TDST line at 58.87 and change. There's support at and to one full bar under the line, so we are in a support area. Support doesn't have to hold, but it often will. Let's start with our long-term count. Here's my long-term count. Everything's working so far, and we had a major low, the end of a decade of a generation-long ABC in late 2023. Here's late 2023. You ignore this low, draw a trend line connecting these lows, and you have a direct hit. This is a major league trend line, one of the most important trend lines in the pattern. We broke through it here and immediately reversed. And otherwise, we've been able to hold it above it. If I'm right about this, then ideally, if I'm right that much higher prices are coming, ideally this trend line should hold, which means today's low should have been it if things work out as I'm hoping they will. I don't always get what I want, but I'd like that trend line to hold. If you break through it briefly, it doesn't change matters. We can't use this count anymore, but it's not too hard to make things work. all you do is move black B over, and you can have an A, a B, and C equals A right at the top. You also could call this W. This could be an X wave, that could be Y. Y tends to go over roughly the same range as the X wave. Everything really works with this count. I mean, all these fibs work. The trend line works. We couldn't hold these lows on the close. Where's the other thing I wanted to show? Let's see, the close was 58.49. We couldn't even hold on to these lows, not just from the last few days, but from way back here. See, here's 58.49. We took those lows out and they couldn't hold them. If that's maintained, which we don't know yet, but if that's maintained, that's the rejection of the break to the lows. Did I draw that here? Yeah, I drew it here. I just forgot. Here's the close. We closed over all these lows. I mean, that's what you want to see at the bottom. Well, Tuesday's pattern has a really low regardless of where we open. Typically it's a rally day with a high in the final hour, but if it's weak, we see more weakness. We dropped to a major trend line, that one that goes back to 2023, in a straight line. If the drop is to continue unabated, we should gap under that line. If we don't, we should retrace back to that line. Sentiment indicators are at levels typically seen only at major market lows. There's a wave count compatible with the current decline having ended today. A system of a friend of mine called the point value this low on the dot. I'll tell you, not every one of his calls works, but if there isn't one of his numbers printing, it probably isn't the end of the move. We got one of those numbers exactly today. Today's range was 175 handles, and very often the biggest range of a leg occurs in the last day of the range. The decline was unable to take out prior lows on the close. Today was an excellent candidate for the end of the decline. This is just about everything I want to see on the last day of a decline. What I still haven't seen is a rally start. But this is just about as ideal as it gets for a low, assuming this holds. This doesn't hold and I'm wrong. I mean, I'm wrong plenty of times. But if you're ever going to try to catch the falling knife, that low should be it. So it's the pattern tomorrow with the early low. If this breaks by a penny or two, I don't care. But as long as this holds, I think we're going to start wave 3 up. And if it doesn't, that's really too bad because it has a lot of what I look for. It's the pattern with the early low. Tends to be a rally day. We're hoping this holds. Hoping. And that's today's call.